that maybe others don't. Jim Bianco joins us right now. He's the president over at Bianco Research, kicking us off to the close. And Jim, I mean, you saw that dip buying. We saw it yesterday for like 15 minutes. We saw it today, and it seemed like it was lasting for a while. But I'm not quite sure what exactly is giving people the optimism that somehow the worst is behind us. Do you think the worst is behind us?
No, it's still open in the air. And I think that dip buying you saw, that's why it didn't hold, is it was a bunch of short covering, as you said, and a bunch of speculators. And then they all looked at each other and said, no one else is showing up. And then they all turned around and they got right back out. I also think the other problem that's happening with this market is the disappointment in the Treasury market. Sure, it's rallying. But you just had Larry Summers on talking about recession. Goldman's talking about recession. JP Morgan's talking about recession. You had the earnings numbers down. You have the stock market down 20%. The 10-year yield was 360 last September. It should be 325 right now. It shouldn't be 425. So there's a real, disappointment that we're not seeing any relief from lower interest rates. And I think that's because inflation is a real problem, which is what Jay Powell said on Friday. He's now going to be slow to cut rates because he's worried about inflation.
Yeah, and it's kind of interesting, too, when you talk about the uncertainty in the market. We talked a lot yesterday about volatility, equity volatility, still elevated. But when you look at volatility in the Treasury space right now, Jim, I mean, whether you take TLT or one of the other measures out there, we're like 90 to almost 100% above recent averages.
That's correct. I mean, there is a tremendous amount of volatility, not only in the Treasury market, but in all markets. The VIX is at 50. The MOVE index, which is kind of the bond market's VIX, is nearly 140 on that index, which is extremely high. So you've got a lot of skittishness in these markets, and it's also leading to people talking about things like the basis trade is unwinding, leveraged traders are being forced out. And I would just say in general, typically when you see wild movement like this, too many people on social media like to say who's making profits on this? Nobody. Most people are losing money on this. The better question is ask, is anybody blowing up? Is a better way to think about it than who's making a profit.
Are they? Is anyone blowing up, Jim?
Not that we've heard, but, we're not done with this move yet. And I'm sure that there are a lot of people that are looking at their P&Ls and they're not very happy with what they've seen in the last week or so. But I don't know if it's gotten to a crisis level individually at any particular firm.
But when you continually have sort of the dollar weaker, bonds selling off, higher yields on the back end, and equity selling off all at the same time, and a spike in the VIX, how long does that last for before we see some real strain?
Oh, I think you're talking about days or a week or two. I mean, we can't live like this for much longer without there being some real strain either in the economy or in the financial system of some time. The financial system, by the way, is so complicated, it's impossible to tell where it's going to show up. But since I'm talking to Bloomberg, there'll be a red head somewhere here in the next 2 weeks if this doesn't slow down. And I suspect it will slow down, but if it doesn't, that's what you'd be looking for.
Well, what is the reprieve, though, Jim? I mean, when we talk about the idea of sort of what arrests the sell-off, and not just arrest it, but really what helps the market sort of, if not get back to where it was over the last few weeks, certainly to reclaim some of those losses. Is it some deal that Trump strikes with some of these various nations on trade? Is it more clarity on the economic front? Is it the Fed stepping in? What does the market need to see?
I think it's a trade deal. I don't think you're going to get clarity on the economic front. The Fed's not going to step in until they see signs that inflation is coming down. I think you need a deal that provides a roadmap. Here's how we're going to deal with, this situation. Country X did it this way. Now the rest of you, let's follow that model and see if we can get some deals together. Until we get that, I think we're going to stay the way we are right now. And hopefully that deal is hours, if not a couple of days away. And that would be the hope right now.
That would be the hope. But, Jim, that's pretty fast. I mean, we're talking about a president that in, the 11, 12 weeks he's been in office has done things that under previous presidencies, including his own, took like a year and a half to get to in terms of implementing tariffs. I mean, how do you even negotiate at that type of speed?
Well, that's a good question. I mean, I don't think you could tell this market that we're going to leave these tariffs in place and leave the situation as it is for a year or a year and a half while we negotiate some kind of version of the GATT, version 2.0. That's the General Agreement of Tariffs and Trade that was negotiated, a couple of decades ago that really set the stage for modern globalization. Yes, but You set this up in a crisis atmosphere with these massive tariffs. Look at China. We got, as of a couple hours ago, with 104% tariffs with China. How long can we continue to go like this? If the answer is we're going to go like this through the rest of the year and into 25, then these markets, this is going to be the way these markets are going to be for the rest of this year.
Yeah, and the Chinese premier just speaking just a while ago saying China is equipped to fight, Jim. Got to leave it there. Jim Bianco, president over at Bianco Research. Another volatile day on Wall Street with stocks now hitting session.